All right, my name is Chris Campbell. I'm a practicing CPA and I work with small businesses and individuals to help them pay the least amount of taxes possible while keeping them out of jail. So today I wanted to talk about business funding and some unconventional ways of business funding, business finance. And this is more so if you are already in business and you're operating versus startup capital. In dealing with not only my business, but some of my clients' business, we've utilized a number of non-traditional funding ways to get working capital to make purchases to expand your business. Some of the payment processors that we deal with are now offering funding options. And I'm actually a big fan of those because it's very quick. You can get funding in a day or two. Payments are automated and it's a quick way to get capital. So PayPal, for example, I use PayPal to an extent in my business, and they will offer funding or loans, being that PayPal knows what you bring in because they process your payments. They have an idea of what you can afford to pay back. So they will lend you the money and they'll take a portion of all the payments that you collect going forward. So for example, let's say they'll allow you to get a loan for $10,000 and they'll say, okay, we'll take 10% gross of all the payments that you collect going forward until it's paid off. Now, as opposed to charging an interest rate, you are paying interest, but the interest is in form of a flat fee. If you want to take out 10,000, they will say instead of paying us back 10,000, pay us back 12,000. So when you break it down like that, the rate and the return is actually pretty high versus a traditional bank. So you're not going to get the best rates as far as paying back that capital, but I'm a fan of it because of how quickly you can get funding and there's almost no hoops to jump through because these payment processors know your history. So before they allow you to get these loans, they've analyzed your payment processing history. They know how much you're bringing in. They know how much you're spending. It's very easy for them to make a decision as far as what they can loan. And these loans can go up to $50,000, $100,000. It's a good way to get quick funding. Again, not the best rates. It's a good way to keep cash flow going. And they make it quite easy. The ideal way to be funded would be through a line of credit because those rates tend to be lower and it's revolving debt. You can use it over and over again. I would look to get a line of credit before using a credit card. The rates are just going to be a lot lower, but these payment processors are a quick way, not the cheapest, but it's a quick way to get working capital going. So just to give you a few processors, PayPal does it, Stripe. I don't know if Stripe does it directly, but there's a company called Pipe that will lend based upon your Stripe activity. I don't know if Stripe has turned around and joined the game. Books now does that. I know in the restaurant industry, DoorDash does it for restaurants. So they will lend you money based upon the volume that you do through DoorDash, and they'll just take the money out of your payments from DoorDash. Those are the few that come to mind. The point of this is that if you are using traditional means of payment, as far as just using regular credit card processors, you may want to consider using some more of the newer or FinTech, as they refer to them now, methods of getting paid because they do offer such products. So if you're just using a regular terminal or if you're still using checks to collect money, you could be missing out on ways that you can receive funding. Square probably does it as well, but I think a company like Hype will attach to your Square. And again, it's really all of these companies knowing your processing volume and your processing amount. So that's how they determine how much that you can get. I don't endorse one over the other, but if you're still using the old school ways of getting funded, some of these newer ways and newer processing tools can have that extra benefit of easy business funding. Again, you may pay a little bit more for it than a traditional bank. The upside is you get cash quickly into your business, especially if you need it for something that may be unexpected. And with some of them, I love that you pay back based upon sales. So if you don't sell as much, that payment isn't as high. So you're not tied to that traditional monthly payment where, let's say that you didn't have a good month, but that payment still stays the same. So that's what I also like, where it just gives you the flexibility of pay as you go. And that payment will fluctuate with your business activity. So you should check those out. So that's all for now. If you have any more questions about this particular subject or any other accounting or tax, finance questions, feel free to reach out. I'm happy to help. That's all for now. I'll see you on the next one.